One more reason, welcome to Things Invest, talk about investing, finance, and fresh development. For today's favorite terms only. The investment on top of today will be Ethereum ticker ETH. First, I want to say happy Tuesday, everybody. Hope you had a great week so far. With respect to Ethereum, I'm recording as of 9:45 a.m. on the Eastern Time. Currently trade like the $2,522, down about 0.39% so far. And with respect to the anticipations for the London fork that's expected to debut tomorrow, seems like on a macro perspective, we have a little bit of more of a normalization that's occurring at the moment. Stem from these equity and the crypto sell-off that we had yesterday. I would say most severe on the equity side, but with some correlation effect onto the crypto side, mainly driven by the rising concerns about the COVID variants and the peaking economical growth that's basically waiting against a lot of stock earnings results. Okay, so that's one factor that we also have to encapsulate into the adjustments. Despite the positive media affectation that we've been experiencing so far, right? And with respect to the London fork that we're expecting to happen tomorrow, right? Conceptually, what does that really mean with respect to the affectation towards the price, right? So we know that, based on a high level, Ethereum network is undergoing an upgrade this week, tomorrow technically, right? And the code change within the upgrade may affect the Ethereum price, right? So let's dissect that point a little bit more, right? So with respect to the August 5th or August 4th upgrades, right, known as the London hard fork, it will bring a major change in the form of EIP 1559, right? And the code change will subsequently remove some Ethereum from circulations, right? But in theory, that will also have an effect on the Ethereum price. But what does that really mean, right? And when is that going to happen, right? So EIP 1559 will change how transactions fee work, right? Though the details are a little bit complicated, so I don't want to go too much into it. The upshot is that anyone who makes a transactions on the network will now pay a base fee that will be burnt instead of going to Ethereum's miners, right? And what does that mean, burning, right? Burning in the sense means that to take coins out of circulation by essentially sending them to an address that no one has the keys for. And that's what I mean by burning, right? And reducing Ethereum supply places something that's called a deflationary pressure on the Ethereum network, right? Though the new coins are still being created with each blocks added to the chain, a little bit of Ethereum, also disappearing, right, at the same time in that dynamic, right? So deflationary pressure theoretically should squeeze the price upward because of the growth of supply is slowing, right? Also remember that with respect to the 2.0, the miners historically would be less incentivized to continue to mine the antiquated Ethereum that we've been circulating for some time now, right? So that's one positive catalyst that we should be expecting in the upcoming weeks, despite the sell-off that we been being driven by obviously COVID variant news and obviously the pressure that's being weighted on U.S. equity market, right? So that's one drivers. Another news that's in part of the equation that we want to adjust to the price level that we're currently fluctuating at the moment is coming out from Pantera Capital, the CEO Dan Moorhead, right? He predicts that based on the verbiage that I read on Cointelegraph, and again, Cointelegraph is one of those media sources that you have to kind of read with a grain of salt. But Pantera is one of those, first founded crypto fund based out of San Francisco, California. And they currently have a large holding into Bitcoin and obviously Ethereum. So they have obviously a bias towards their value proposition and their long-term trajectory for the price point for Ethereum, right? So based on the depictions that I read in the article, it's definitely a very bullish one, a persuasive one, and they do a lot of name dropping and quantitative number calling out predictions that the CEO predicted that Bitcoin would trace anywhere around like 80,000 to 90,000 by the end of this year, and rising above 120,000 within the year, right? And even sometimes for Bitcoin in the next decade or so should reach about close to 700,000 per Bitcoin, right? He didn't really say anything specific about the price predictions for Ethereum, But I could have recall a while back he did say something about Ethereum should reach about $12,000 by year end 2021, which is a little bit more optimistic in comparisons to my price point and obviously other investment banks price point. I know most people just on a conservative level say it should reach anywhere from like 7,500 to $10,000 per Ethereum, but he said something about like 12,000. I specifically recall in one of the conference he talked about that, and he said something about basically Q1 of 2022 or Q2 after obviously the fork, right? And then we should see a lot of massive corporate adoptions going forward. So I don't know what that means or the specificity around his analysis on how he encapsulate that number in his projections. But anyways, with respect to the technical analysis, we are currently hovering on a sideways fashion right now. We are basically trending between the levels of 2,750, which we never got to, versus the 2,450. We're basically in the middle right now. So I'm going to go through technical analysis to see how's the momentum going right now. What should we be expecting both for tomorrow and the rest of the week coming, right? Tomorrow's a relatively large catalyst, and so is on Thursday at the same time. So stay tuned, stick around, let's make some money. Moving on to the technical analysis for Ethereum ticket ETH, I'm recording this of 9:55 a.m. on Eastern Time. Current trade like the $2,518, down about 0.59% so far. You can see that across the whole equity market today is relatively red. And this is not really anti-correlation effect that's really driving right now. This is a sell-off that we're having across the whole entire market because, again, with respect to the COVID variant news that's being spread and that got picked up in the mid affectation front, so people are slowly liquidating, right? Comparable to the March crash that we've had last year, basically, right? But obviously, this is less severe, a little bit more, moderate in comparisons to the crash that we had. But obviously, it will drive some corrections, some selling pressure. That's a more proper term for it. So that's the reason why we kind of hovering on a sideways fashion, potentially leaping down to the 2,450, right? And I think today we actually got to the 2,445, which is the level we identified. And I wish I actually bought some at that level because that's a level of substantiveness. If you look at the historical trends, right, that's the level that we consolidate for quite some time, right, since May 19th all the way to June 16th. And if you look back even further, we had a bunch of consolidation as well from April 14th all the way to April 26th, right? So collectively speaking, you have like maybe a month and a half of consolidation at that level of 2,450. So that's a level of dollar cost average if I was you, right? However, we should see a little bit more selling pressure after the fork. But overall, long-term wise, we know that the fork is going to subsequently cut off some circulations of supply for Ethereum, which, logically, it should squeeze the price for Ethereum to go up from here after the transition to 2.0, right? But I do see more of a correction because of the percolations that we've sustained so far ever since the 1750 that we had on July 20th to currently today, right, on the 3rd. So it's been, quite some time now, like close to about 2 weeks of just buying pressure ever since, right? Collectively speaking, driven by a lot of positive news that have been percolating so far, right? That's been coming out consecutively, right? And it's not a coincidence why that is happening, right? Because a lot of whales are in part of the equations of manipulating these price levels that we have been fluctuating towards, right? So I think a normalized type of cadence going forward, knowing the fact that MACD should be crossing down right now, you see that we are forming a curvature right now. We should see a little bit more of a sell-off coming. On top of the fact that RSI is pretty much overbought at the level right now, that this is a normal course of correction that needs to go down to 2,450, ideally go down to 2,250, and ideally, really, I would love to be buying at the 2,150 again, and by then, we should be relatively depleted back down to the normal level on an RSI perspective, and then we should continue to rally from there, right? And the with respect to the price sensitivity going forward, we should be continue to search up going forward, but it needs to go through a correction first to kind of build some new base, right? Because like the more base we found, the more base we build as a foundation for the building they want to basically erect going forward, the more substance you have to build upon going forward, right? So I think ideally, it's unfortunate that we never got to the 2,750, that we could never really build more ground at that level. But 2,450 is not a bad level, and I think we're doing it right now, right? To just like build more substantive floors at that level. And I do believe that in the near term, 2,450, that's the floor that we have right now. But we should see a little bit more selling pressure. And I would say that, historically 2150 was the comfort level. I think 2450 is slowly becoming a new comfort level as well, which is a sign of improvement on the price dynamics, right? In the supply and demand dynamics as well. So something to watch out for, and that's the predictions that I see. But ultimately, we're in the business of risk mitigations, and I think these are the levels, the frames that we should be holding for long term going forward, knowing the fact that Ethereum should be growing exponentially going forward, and these are just volatile times, and you just have to control your emotions and your sanity going forward. Recap on numbers and technical analysis again, right? The 2,450 is a more of a cushion level that we should be hovering at, knowing the fact that that seems like to be the new floor that we have, right? It's like the second floor. The first floor is 2,150, right? And I hope that after the fork, right, we should have some buy the rumor, sell the news affectation, or some negative news that could get us back down to the 2,150. I would ideally buy at that level, heavily, because of the confirmatory news that we should be expecting on the supply and demand imbalance that should subsequently propel the price for Ethereum to go up from there to continue the bull cycle going forward, right? So the 2,150 is definitely a level that I'm comfortable at buying. And it's a reason why I've been buying for a while, right? For at that level, right? And long term wise, my prediction is not as aggressive in comparisons to other investment banks or Pantera Capital or Cathy Wood even. My price tag is more like 9,800. Try to breach the 5-digit mark, but not completely there. I think that's like the ideal price target for a lot of people to sell off from there, and we kind of hover around like the $9,800 level from there. But that's also going to generate like a four times your money from now from this level right now, which is a relatively good return. So that's it for the respect my technical analysis on Ethereum ticket ETH. Hopefully this is helpful into giving you that clarity and that understanding around like how's the London fork and some other macro drivers going to be affecting the price level going forward. But yeah, feel free to ask me any questions. Again, if you have any questions, I'm always relatively responsive. And stay tuned for the next to come up. Take care. Bye.